Good evening, and welcome to the Crypto Overnighter. I'm Nicodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. on Tuesday, July 4th, 2023. Happy Insurrection Day to my fellow Americans, and welcome back to the Crypto Overnighter, where we have no sponsors, no hidden agendas, and no BS. But we do have a lineup of stories that will take us on a journey through the highs and lows of the crypto world. We'll start with a tale of a pop icon's venture into the volatile world of NFTs. Then we'll dive into the exciting new developments in Bitcoin Ordinals. We'll also explore the latest moves from investment giant BlackRock in the Bitcoin ETF space, and the ongoing saga of Genesis and their debt restructuring. From there, we'll jet off to Hong Kong, where experts are urging the government to launch its own stablecoin. And finally, we'll wrap up with a look at the latest developments in central bank digital currencies in the UK and China. So buckle up, hit that subscribe button, and let's dive in. Justin Bieber ventured into the world of non-fungible tokens by purchasing a Bored Ape Yacht Club NFT. However, this investment led to a significant loss as the value of his digital collectible dropped by about 95%, theoretically costing him a loss of approximately $1.2 million. Bieber paid $1.3 million for the Bored Ape NFT in January of 2022, but its worth has sharply declined, falling to around $60,000. There are speculations that Bieber may not have incurred any real loss, as he may have received the NFT for free in exchange for promoting the collection on social media. This speculation is based on the fact that Bieber's wallet received a transfer of 400 Ethereum, around $1.2 million at the time. And that Ethereum was transferred from a wallet linked to MoonPay and Yuga Labs. However, no official statement confirming this has been issued. The Bored Ape Yacht Club NFT collection has experienced a significant decline in value. The Bored Ape Yacht Club NFT collection has experienced a significant decline in value. The current floor price for the Bored Ape Yacht Club is around 30 Ethereum. The collection has a 24-hour trading volume of 3,500 Ethereum across 118 sales. Over the weekend, the floor price for both the Bored Ape Yacht Club and the Mutant Ape Yacht Club collections plummeted. The floor price for a Bored Ape fell from 38 ETH on Friday to less than 28 Ether on Sunday, before recovering to 30 Ether. Similarly, Mutant Ape Yacht Club fell from 7.5 Ether on Friday to less than 5 Ether on Sunday, before recovering to 5.4 Ether. The decline of Bieber's NFT investment is not an isolated incident. The floor prices of several top NFT collections have experienced drops. Within the Azuki ecosystem, NFT collections have been particularly affected. Over the weekend, Azuki, Elemental, and Azuki Elemental Beans collections lost 20%. Snow Genesis, an NFT lending and borrowing platform, also reported a record-breaking liquidation of over 1,200 NFTs in the past 3 days. The NFT market is currently experiencing a significant downturn, but blue chip NFTs could soon be stabilizing. CryptoPunks and Mutant Ape Yacht Club have seen some gains on the daily charts. However, these crashes exist in a longer pattern of decreasing NFT prices, with Bored Apes crashing 67%, from 88 Ether to 29 Ether over the last year. Over the same period of time, Mutant Apes plummeted 68%, dropping from 16.5 Ether to 5.2. The rapid Bored Ape crash comes shortly after the team behind the popular Azuki NFTs issued a new collection that was criticized for having very similar artwork to their previous collection. This release resulted in a 60% floor price crash over the last week. Now, before we dive into our next story, don't forget to hit that like button, subscribe, and ring the bell for notifications. You don't want to miss out on the latest in the crypto world, do you? Now, speaking of the latest, let's talk about a new development in the world of Bitcoin Ordinals. Bitcoin Ordinals are a type of digital asset inscribed with data on the Satoshi. The cryptosphere is buzzing with the introduction of a new standard called BRC-69. This standard, launched by the Ordinals launchpad Luminex, simplifies the creation of recursive ordinals and introduces several enhancements. Recursive ordinals are a mechanism that allows users to extract data from existing inscriptions and to use them to create new ones. This innovation significantly reduces inscription costs by more than 90%, which can help decongest block space as more inscriptions flood the network. The BRC-69 standard works through a 4-step process that includes inscribing traits, deploying the collection, compiling the collection, and then minting the assets. After images of the traits are inscribed on-chain, the deploy operation creates a JSON text inscription. This inscription contains the basic details of the collection, including inscription IDs. This functions as a reference for other parts of the process. The compile inscription references the deploy inscription for the traits in inscription IDs to be used for the final image. Users can also customize the compile inscription logic depending on the preferred specifics. Finally, the mint phase for BRC-69 stores the index of traits. It references the compiled inscription so the image is easily rendered using the on-chain data. Bitcoin Ordinals, introduced by developer Casey Rodarmer, are digital assets inscribed with data on the Satoshi. This essentially transforms a Satoshi into an NFT. They are on-chain, written directly on the Bitcoin network, unlike traditional NFTs which connect to other blockchains. Also, Bitcoin Ordinals cannot be censored, allowing anyone to create any type of ordinal at any time. The introduction of BRC-69 has been hailed as a significant moment in the history of Bitcoin. It offers high flexibility and opens the door to more enhancements and features. For instance, it is now possible to launch collections with entirely on-chain pre-reveal process. This innovation has been described as Bitcoin getting an internal internet where every file can request data from other files on Bitcoin. It's unclear yet exactly how people will use this, but it is undoubtedly an important point in the history of Bitcoin. The BRC-69 standard is a way of recycling data already inscribed and reducing the current cost by more than 90%. That has massive implications for the future of Bitcoin Ordinals. Alright folks, we're about to switch gears here, but before we do, remember to follow us on Twitter for more in-depth analysis and updates. Now, let's move from the world of Bitcoin to the realm of investment giants. BlackRock has made a move that could change the game for Bitcoin ETFs. BlackRock refiled for a spot Bitcoin exchange-traded fund with the Nasdaq. This move follows similar actions taken by the CBOE exchange last week. The iShares Bitcoin Trust, as it is known, is a spot Bitcoin ETF with BlackRock at the helm. This updated filing includes a surveillance sharing agreement with Coinbase, which I think is going to be a problem. I can't see Gary Gensler improving an ETF where the surveillance partner is not under the purview of the SEC. I just don't see it, but I could be wrong. This agreement is expected to supplement Nasdaq's market surveillance program. The surveillance sharing agreement is intended to be a bilateral agreement between Nasdaq and Coinbase. The expectation is that a definitive agreement will be finalized before trading commences. This move is similar to other firms' applications and is seen as a way to address the concerns of the U.S. Securities Exchange Commission. Last week, the Wall Street Journal reported that the SEC had informed both Nasdaq and CBOE that recent filings from BlackRock, Fidelity, and others for spot Bitcoin ETF funds were not clear and comprehensive. In response, CBOE quickly updated its filings for separate spot Bitcoin ETF proposals, including one proposed by Fidelity. The exchange included language that it expected to enter into a surveillance sharing agreement with Coinbase. The SEC has not yet approved a spot Bitcoin ETF no matter who the agreement is with. Proposals could face headway from the agency as it has repeatedly cited concerns of fraud and market manipulation when assessing past applications. The refiled proposal for the BlackRock fund was first filed last month. The race to a spot Bitcoin ETF is on, and the industry is watching closely to see who will be the first to cross the finish line. Because as we have seen in both the terms of the futures Bitcoin ETFs and gold spot ETFs, the first fund to market generally scoops up the lion's share of the assets under management. The move by BlackRock and Nasdaq is seen as a positive step toward addressing the SEC's concerns. By partnering with Coinbase for surveillance sharing, they hope to provide the necessary transparency and oversight to alleviate fears of market manipulation. However, the SEC's approval is not guaranteed, and the industry will have to wait to see how this plays out. The outcome could have significant implications for the future of Bitcoin and other cryptocurrencies in the investment world. Now, if you're enjoying our deep dives into the world of crypto, don't forget to smash that like button and subscribe to our channel. We do appreciate the support. Now, let's move from the world of investment giants to the ongoing saga of Genesis's debt restructuring. Cameron Winklevoss, co-founder of the Gemini crypto exchange, recently made a significant move in the ongoing debt restructuring talks over the bankrupt digital asset firm Genesis. He took to Twitter to share his final offer, which could potentially end months of negotiations and mediation. This offer includes a plan for $1.5 billion in forbearance payments and fresh loans. This open letter was addressed to Barry Silbert, the founder of Digital Currency Group. Digital Currency owns Genesis and the giant crypto asset manager Grayscale. Winklevoss expressed his frustration over DCG's delays in coming up with a satisfactory plan to repay Genesis creditors, including customers of Gemini's Earn program. He also pointed out that DCG has missed a payment of $630 million to Genesis. The proposed plan calls for $1.465 billion of payments and loans denominated in dollars, Bitcoin, and Ether. The deadline to agree to the deal is 4 p.m. on July 6th. The Gemini co-founder warned that if the deal is not agreed upon by the deadline, it could lead to lawsuits against DCG and Silbert personally. He also mentioned the possibility of pushing to put DCG into default and working on a non-consensual debt repayment plan. According to Winklevoss, Genesis owes around $1.2 billion to Earn users. The situation has been further complicated by the fact that Genesis had listed more than $3 billion in claims to its top 50 creditors in a January court filing. Winklevoss criticized DCG for dragging out a resolution and increasing professional fees to over $100 million, which he claims have gone to lawyers and advisors at the expense of creditors and Earn users. So here's my take. The ongoing debt restructuring talks and final offer put forth by Winklevoss are indicative of the complexities and challenges that can arise in the rapidly evolving world of digital assets. It just goes with the territory. This situation underscores the importance of robust financial management and accountability, especially in a sector that is still finding its regulatory footing. The potential consequences for failing to agree to this deal, including lawsuits and the possibility of DCG going into a default, could have significant repercussions for the broader crypto market. No firm is an island unto itself. It could potentially undermine investor confidence and trigger regulatory scrutiny. This situation also highlights the need for clear communication and transparency in dealing with such issues, as evidenced by Winklevoss's decision to make his final offer public via Twitter. The outcome of this situation could set a precedent for how similar issues are handled in the future of the crypto space. It serves as a reminder of the risks and challenges inherent in the world of digital assets, even as it continues to offer exciting possibilities for innovation and growth. Before we move on to our next story, remember to hit that follow button and turn on notifications so you never miss an episode. Now, let's take a trip to Hong Kong, where experts are urging the government to launch its own stablecoin. The Hong Kong government is being urged to issue its own stablecoin, HKDG, to compete with existing stablecoins like Tether and USDC. This proposal comes from a group of experts including Wang Yang, the Vice Chancellor of the Hong Kong University of Science and Technology, and the Chief Scientific Advisor of the Hong Kong Web3 Association, among others. They believe a government-backed stablecoin would reduce costs, improve payment systems, aid de-dollarization, and strengthen Hong Kong's fintech capabilities. The experts argue that the current plan of allowing private institutions to issue stablecoins may result in limited market share. They cite the example of Singapore's XSGD stablecoin. Compare their market cap of $6.6 million to the more than $110 billion for Tether and USDC combined. The proposal suggests that with Hong Kong's foreign exchange reserves of $430 billion, a government-backed HKDG stablecoin would offer higher credibility and lower risk. The proposal acknowledged potential risks such as legal and regulatory challenges, technical risks, and short-term exchange rate fluctuations, but argues that these risks are lower for a government-issued HKDG than for stablecoins issued by private institutions. The authors believe the stablecoin would benefit from the government regulation and transparency provided by blockchain technology. They also argue that HKDG would help Hong Kong take a substantial step toward de-dollarization and challenge the dominance of the US dollar in the crypto ecosystem. On the other hand, despite a broader crypto rally, the stablecoin supply has decreased. According to a report by ratings agency Fitch, volumes in stablecoins and the aggregate market capitalization of the sector is lower. Total stablecoin supply has declined from $138 billion at the start of the year to $124 billion. However, Tether has bucked the trend, picking up market share from its rivals ever since USDC's depegging event in March. The monthly average of daily trading volumes in the top 10 stablecoins declined from $53 billion in March 2023 to $28 billion in May. Fitch notes that there is better liquidity in the assets backing stablecoins. Stablecoins are meant to trade one-to-one against a fiat currency, typically the US dollar, but are not backed exclusively by them. The underpinnings of stablecoins include a wide range of assets with different liquidity profiles. For instance, within USDT's reserve portfolio, the portion of treasury bills and repos rose in Q1, reaching 65% and 10% of reserves by the end of the quarter. Binance also improved the liquidity position of its stablecoins, with the repos in the portfolio over-collateralized by long-term US Treasury securities and are callable daily. Now, if you're finding our analysis insightful, don't forget to like, subscribe, and share our podcast with your friends. Now, let's talk about the buzz around central bank digital currencies. The digital world is buzzing with the talk about central bank digital currencies, but the reality is much more complex. In the UK, the focus is on privacy for a potential digital pound. Julia Demidova is the head of FIS CDBC and digital asset strategy. She emphasized that privacy is a key priority for a UK CDBC. She stated that a CDBC could provide greater transparency and visibility of transactions while protecting individual privacy. However, she also acknowledged the challenges, including extensive testing and integration into existing infrastructures. The UK is also tightening regulations around crypto promotions. The Financial Conduct Authority issued a compliance deadline for firms marketing crypto assets. Non-compliance could result in criminal charges, including up to 2 years imprisonment. The FCA's order is effective from October 8th and includes overseas firms marketing to UK customers. Meanwhile, in China, the city of Jinan is accepting CDB payments for bus rides. This move is part of China's ongoing efforts to test and implement its own digital currency. However, not everyone is convinced about the viability of CDBCs. The head of research at crypto brokerage Copper expressed skepticism about the current wave of CDBCs. He stated that the current CDBC models are not yet a viable replacement for cash. He pointed out that central banks lack the talent and infrastructure to run a fully automated, decentralized equivalent to cash. He also raised concerns about the potential for chaos in decentralized open markets if CDBCs issued by commercial banks were to lose consumer confidence. So while the potential of CDBCs is exciting to some, there are significant challenges to overcome. These include ensuring privacy, meeting regulatory standards, and establishing a robust and secure infrastructure. As the world continues to explore the potential of digital currencies, it's clear that the journey toward a digital economy will be a complex and challenging one. So what happened? We kicked things off with the story of Justin Bieber's significant loss in the NFT market, a stark reminder of the volatility and risks inherent in this space. But it's not all doom and gloom in the crypto world, as we saw the introduction of the new BRC-69 standard in Bitcoin Ordinals, a development that could revolutionize the way we use and interact with Bitcoin. We then switched gears to the realm of investment giants, with BlackRock's refiling for a Bitcoin ETF. This move could potentially change the game for Bitcoin ETFs and is a testament to the growing interest in crypto from traditional financial institutions. From there, we delved into the ongoing saga of Genesis and their debt restructuring. We talked about Cameron Winklevoss's final offer, a situation that underscores the complexity and challenges that can arise in the rapidly evolving world of digital assets. Our journey took us to Hong Kong, where experts are urging the government to launch its own stablecoin. This move could potentially challenge the dominance of the US dollar in the crypto ecosystem. And finally, we wrapped up with a look at the developments in central bank digital currencies in the UK and China, a testament to the growing interest in digital currencies from governments around the world. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating, or maybe a review. And in the meantime, we'll see you tomorrow night.